Um, okay, so I suppose I'll get started now, and I'll just pretty much go back over the content when other people join. So earlier today we were talking about um, where I thought Rune was headed, up to around 3.5, and just to re-illustrate exactly what I was talking about before, on the 6 hour we've actually got a crossover of the 50 and 200, which is very, very bullish, might I add. Um, Mostly because you don't see it happen very often, and when it does happen, this is the result. Literally rocket. Rockets up 159, happened here. Rocket up 109. Again here, rocketed up 89%. And then you've got this small, like if you want to go real far back, the first crossover, resulted in literally like up here, that much, a lot. So I use the 6 hour for this EMA particularly because it's a very reliable indication. Since we don't get a lot of fake outs, right? So when it crosses, it crosses. There isn't like a crossover and then it pulls back down and it traps the longs and stuff, but rather we see it decisively break upwards, which sets the tone, the environment for the EMAs to cross. We come back for a double. We come back for a back test and then a mitigation of that order block that it created around the 50, and then we just see it pump right out of the zone. Um, but generally, this area holds really strong, and it did here too. It just held so strong, and this area held for a while too before we dropped down lower, but we ended up pumping up higher. Um, but yeah, so I think this is pretty good confluence for upside. Um, and the fact that we're forming, although this is kind of a bearish pennant because price action did move down into it, I think we're forming a bit of a bullish pennant. Um, Mostly because of all the tests to the top side. We're decisively bouncing off this trend line as support, and we're hard testing constantly this trend line. So we really want to break out of it. But at the same time, while this has happened, and that we know this is this is a bias side pattern, is because of this crossover, which is why price is trying to push up higher. So, I'm looking at this zone of liquidity where the vectors are all here. Rune's wanting to come up, sweep high for all of this liquidity, and then we might see an actual rejection at the 3.5, which is the sell order block. And it makes like a lot of sense, right? Because if BTC isn't leaving the zone, and we see Rune pump out of the zone, and we know Rune overextends on its pumps, we can we can go from there and say, okay, well, it's gonna see a correction, quite quite strongly, like it usually does, right? Like um, the other night we are pumping, right up here, we are pumping like crazy, and then all of a sudden we saw a huge correction. And the same thing here, we pumped right up um, to around 2.789, and then we just dropped hard back down into this order block, and then we continued upwards. But yeah, so you still watching LM? No, okay. Um. Anyway, so to quickly go through what I wanted to cover was that we could see a strong bounce off this area, break this line, and then continue upwards. We could see a bounce off this level, which would align with the narrative of this um, this order block right here. So we got this order block, this dark order block sitting right here around the 200. I can see some accumulation happening and a bounce to the upside. So if we get like the path, we come back down, we bounce off here, we back test this, we come up, we decisively break to the upside, creating like an inverse head and shoulders or something, or a W formation, which is what you see a lot in the market maker moves. Alternatively, we can come as low as here, the bottom of here, creating a fourth tap of this trend line. We pick up, we feel this imbalance, we reverse, we come up, back test this 200, and then we break it. And then obviously we break the 50. And technically would still be bullish because the 50 and 200 would not have still crossed. We would have to break this trend line and come down lower if we want to see this fake out to the downside and move back down. So yeah, that's what I think. We've got three targets right here for pretty much the next couple days, maybe within the week. But if we do break decisively to the upside and we close above here, that'd be freaking fantastic. And it'd have to be on the daily or like the 4-hourly or something. But if we do, we would probably be seeing prices at least up here. If not, we got the weekly high, market 5. We clear that. Maybe we can get rejected by this high here. But I'd be cutting my trades here, or at least trailing my stop loss pretty strongly around here, and you can obviously ride the trade up here. But I am seeing this as more bullish. This is more bullish. So if you're wanting to take a small position, you can, considering that you're trading off the 50, or you can wait until we either break out to the upside, smash through the daily open, or you can wait for a rejection to come back down into the 200 zone, fill this order block, and continue up. That would be a good long as well. So you can add a long here, you can add a long down here. If we break down further, you can add a long here, and pretty much it just brings your overall average down, and then you'd set your stop loss just under this psychological low, or the underneath the 800. But yeah, so that's how you would play it, in my opinion. But yeah, I just wanted to quickly update you, update everyone on how Rune is. It's by no means looking bearish whatsoever. Even the TDI, it's still looking pretty bullish. Just one sec. There we go. Still looking pretty bullish. So we'll come back up, back test this market base, come back down, and then we break above it. This M formation is essentially almost complete. Break above it, and then we continue up into the overbought sections of the Bollinger Band. But right now, at least on the hourly, we're considered oversold. We've just come close to the bottom of the Bollinger Bands. If you do see it move below it, that would be a good opportunity to take a long. So you see every time that's broken below the bottom trend line of the Bollinger Band, you see that's expanded upwards or in the opposite direction. Just like here, you see that it's kind of expanded downwards, and you see if it does keep retesting, it's creating a bit of a divergence. So it's still really good to hold the position, because you know that there will be an inevitable correction coming soon. And you see right here, we pumped a little bit, still great for a scalp trade. Again, really good for a scalp trade. And you can pretty much just play it by that, depending on what type of trader you are, of course. You have to use lower time frames for scalps, but higher time frames for day trading. But yeah, anyway. I'm 50% in spot now, either to buy lower at 2.66 with the other. Yeah, yeah, spot's good. Spot's really good. It's good for pretty much hedging your leverage trades. Um, so if you go one direction, you can spot trade the opposite, and basically it just helps to mitigate the like some of the risk. But I always recommend just if you're gonna use at least 50% of your trading bag for leverage, take that take that amount, split it into three parts. Put one, say, you see it come down here, back test this trend line. Say this trend line, it gets rejected by this trend line. You want to go long, right? Well, you can essentially take a entry, so a long entry right here, and then you can also take a long entry off the 50. So you see it come back down and back test the 50. So you can actually add the rest of your position to this position, and you can play it all the way up to the top of this trend line. And that'll essentially get you your full 50% profits worth with in terms of leverage. Plus, if it does go wrong, well, you still have two-thirds of your trading bag, which is two-thirds of the 50% that you're willing to trade with, to add to the position. So essentially, if it does go against you and you wait long enough, you can put the other two-thirds down and it'll rip your entry down lower. So when you play off the retrace, so when it comes back up and retraces through your new entry, you essentially make profit regardless. So you're basically not caring about what happens with the market because you've hedged your risk with spot, but you've also distributed your DCA and managed your trade really well. So that's just my 2 cents. Hmm. Do you have any questions, LM? Bro, interesting and educational as always. Thanks for the insights. Have to leave again. We'll look into the chat later on. No worries, bro. It was really good having you around. This was only a really short. Let's make this channel big. I'll send it to some friends. That would mean the world to me, man. I really appreciate that. Um, I might start off, just trying to get like a build a good foundation for myself, get comfortable, with and have some structure to what I'm talking about. Because I am still learning. After all, I'm still learning about Tino stuff. I'm learning about Steve Muro stuff. Um, I'm learning about basically a lot of different market maker concepts, using technical analysis, EMAs, confluence divergences, fair value gaps, slash imbalances, order blocks, basically vector candles, high volume candles, the PSVRA, all that kind of stuff. And I'll be like covering all of that in basically the streams moving forward. But yeah, I just want to help everyone kind of like gain an understanding of where the market's moving, at least from my perspective. But I really hope that you have a lovely day, man. Again, it was really good having you around. Yeah, TA's endless learning. I wish I had the time for it. Have a nice day. Hear you later, man. You are doing a fantastic job. Glad to have you back. Thanks, man. That means a lot. You too, man. Have a good day. I'm gonna probably have something to eat and watch Rune. I'll provide any updates if I see any new developments. But thanks for dropping by. Appreciate it.